Have I changed my mind on investing in property? That's going to be the topic of today's video. Now, many people watching this will know that my last webinar was on property investments in the UK. And one or two people asked me, well, we've seen your content online. You've been a little bit negative sometimes about investing in property. Does that mean you've changed your mind on property investments? Now, the simple answer is not really, because one point I've constantly made for a lot of my online content is if you're a professional real estate investor, you can do very well in real estate. And if you can outsource it to a professional that's trustworthy, you can do very well in real estate. But for the average person, it's not easy to say beat the S&P 500 consistently for say 30 years by being what I would call a DIY investor in real estate, what I would call a DIY landlord, the teacher, the doctor, the dentist, the vet who has 2 or 3 properties on the side. Now, people like that can be passive investments for a period of time. For example, in the UK in the 90s, early to mid 2000s, it was a great time to be a DIY landlord because prices were low after the crash in the early 90s. Interest rates were relatively low, not as low as now, but relatively low. Taxes were lower on property than now, whereas now it's become much more difficult for that kind of person to do it by themselves in an efficient way. Some people can do it, but the number of people who work very hard doing Airbnb, making 6 to 8% per year, when they can buy a real estate investment trust or an S&P 500 index fund that's going to do just as well or better, is very high. Having said that, as I've said, I do think if you can outsource it to a very professional firm, property can have its place. And I'm less negative about the UK real estate market compared to some others, like Japan and some of the other places in the world that I've lived. In addition to that, I do think that there is a time and a place to do it. Like, so for example, take the Dubai property market. One of my most popular videos on this channel was saying investing in Dubai, it's bad in general. But having said that, sometimes prices come down so far, so fast that it can be a good time to buy. The same with the UK property market. It hasn't had a great time in the last 12 or 13 years, but 2009 was a pretty good time to buy. Likewise, right now, buying in London might not be such a great idea for numerous reasons. I think the pandemic, the work from home culture will benefit the regions as opposed to the cities, especially London. But having said that, it just depends on the time and the place. And I do think diversification for a very wealthy investor, having some in property, whether that's through REITs or direct property, some in stocks and bonds and other investments, does make sense. So I've never been 100% negative on property or 100% positive. I've just made the point that actually some markets are usually very bad, and property as an asset class doesn't actually beat stocks. The only way to beat stocks with property is usually to use leverage, to focus on rental yields as opposed to capital appreciation. And so the professional real estate investor, which by the way I'm not, knows all these things. So even myself, the way I would put it is this: even if I was going to invest in property, and I personally don't own any property, I just have REITs, I myself would not want to do it myself. I wouldn't want to be a hands-on landlord. I don't think that, even though I'm in the finance industry, I don't think I could beat the S&P 500 regularly by investing in property, at least net of costs, net of taxes. So even I would outsource it. If you're a lawyer or a teacher or something like that, your chances of beating the S&P 500 or even MSCI World over say a 30 to 50 year career with property, I think are quite slim. And that's always been my major point. Either be a professional, outsource it to a professional, or just don't do it at all. And beyond everything else, I do think it's highly risky to have all your eggs in a liquid basket. So when people say, oh, my property is my pension, I almost have my hands in my head, because a property can't be sold easily. Even rental income, it's not as certain as some other kinds of investments. We saw that during the pandemic. So I do think that for anyone, property should be at the very most 50% of your total net worth. Ideally, it should be 25% or below. How can I help you? In 2 ways. First of all, are you an expat, a high net wealth individual, or just somebody who lives in a part of the world where it's difficult to get access to quality investment solutions? in which case go onto my website on adamfire.com and find out more. If you don't fit into any of those categories, then in which case there's a range of free material on my website, on this YouTube channel, and indeed on my Quora, where I get over 200 or have received over 231 million views in the last few years. And finally, if you want to actually read my thoughts in more detail, go onto Amazon and find my book on there.